let's go into today's price action. Now, a lot of the first initial bullish move happened pre-market, which kind of sucks. I'm sleeping, so I'm not necessarily catching that. Now let's zoom in. All right. So I think the big takeaway from today, or at least the initial morning move, was even the moves that I guess, or the setups that look pretty good, they're still not perfect, right? There's still like this missing piece, or this missing ingredient to each one of these, which sucks. When you have the higher time frame bias, and then you work your way down into the smaller time frame, and you get the smaller time frame setups. To me, those are just much more comfortable. That's all. So you can justify moves coming from specific points. Are you as comfortable taking those trades? That's really the question that needs to be asked, right? So as we go through in the morning, it was important to note going into the AM open that we did get into the discounted bullish hourly imbalance in the overnight session. So again, from the last Mando model completion here, from low, high, discount, bullish imbalance, bullish breaker, that's the one I traded yesterday. You got your run higher. This is the one from the overnight session, from your low up to your high. You got your discount, bullish imbalance, and you started to make progress. Now, it really wasn't, or we started to make progress before 9:30, and then 9:30 hit, and then it was a goner, right? Rocket at 9:30. Now, we took the first buy side target, and again, the important thing to note in this case was that we took that buy side target after this retracement. We still had that buy side overhead, which was 9:35. That was the trade that I ended up taking today, which I posted in the chat and on Twitter. But from this point, you get down into a discounted bullish imbalance, and now here again, here's an example of an imbalance that's getting tested multiple times. Now, you did have a breaker inside of here, which was okay. I think the biggest reason why this trade was such a disgusting mess was because of the S&P. Now, if you go back to the S&P and you look at SPY during that time, right, we had not quite gotten into discount of that range yet. So that sucks, okay? You left it alone, you got into here, and then eventually you ultimately run higher here, okay? Now, the problem with this really was that was something that was I was a little skeptical of. You left behind relative equal lows. I understand that from a NASDAQ perspective, you had a discounted bullish imbalance, you had the bullish breaker, and ultimately you ran higher from that point. Now, running higher from this point, getting into that, not only that 9:35 hourly buy side target, which we were talking about in the live trading session, which was here. We got to that 9:35, which was great. Following that 9:35, we got into that daily volume imbalance. Come on over here, right here, daily volume imbalance. So I kind of signed off with, okay, once we break that 9:35, if I see an imbalance to the downside, that might be something that I'd be interested in to target our hourly imbalance and discount of this hourly range, right? And that's kind of exactly what happened. Now, I am kicking myself because I was at the gym and then I went to get lunch, so I missed out on this, but this turned out to be great. So following us sweeping that high and getting that higher time frame objective completed, you form your first 15-minute imbalance here, okay? Once that 15-minute imbalance forms, what is that kind of suggesting, right? And this one actually had some layers to it because you had the higher time frame confluence as well with us getting into that volume imbalance. So following the first imbalance forming here, price ultimately gets back into that first imbalance, and from this point we reject, okay? And when we reject, what's the draw in this case, right? You can look at this from really a number of different ways. The first you could look at, you could say, okay, well, inside of this range that we have here, wait, let me just confirm something. Yep, okay. Inside of this range, I want to target at least 50%. Now, once you get to 50%, which is great, so right there, right off the bat, that's 70 points. 70 points on NASDAQ, that's, that's quite a bit of money, right? That's $20 a point, 70 points, $1,400. That's pretty good. That's on one contract. Now, with that move, now you got to look left. We got to 50%, odd nams complete. Does it make sense for us to go any lower? Now, look left. Do we have any bullish imbalances inside of this run? Nope. There's no Mando model setup. Therefore, the next target really could be our buy side here. And then beyond that buy side target here, you could then look for the next draw on liquidity, which would be here, which would, again, shift your smaller time frame market structure to do what? to give you the higher time frame discount, which is your hourly and 4-hour imbalance. See how it all overlaps? Every time. Every time. So how's that? Does that make sense for everybody here? So now again, I don't think it was necessarily the prettiest long setup for today because a lot of it happened prior to market open even. And then you had a little bit of a divergence mess between both ES and NASDAQ. Yeah, overview. That is something that you guys should really start to really dive into, okay? Because this is a very specific example, right? Like I could say in OddNam, I could say, okay, well, creates the first bearish imbalance, then I look for the rejection and the first imbalance in discount of the range. I could say that, but to me, all bets are off at 50%. Right off the bat, think about this. Because I know, especially people who are newer to this stuff, you're going to hit 50%, right? And if I say, oh, you should look for the first imbalance and discount of the range, you're going to be like, oh shit, there's no imbalance. I'm holding it all the way to here. You get this one green candle off of 50%, I guarantee you're selling this. And you're not getting it off of 50, you're selling it here. And sometimes that could be much bigger than what you would want. But there's always going to be some sort of, whether there's a bullish imbalance or not, you're going to notice, and I want you guys to notice, that at 50% of the range, at equilibrium, you might just see a green candle thrown in, right? You might see some resilience to that 50%. Now, there's no relevance to it. There's no imbalance there. I understand that. But with just a given range, if you see a green candle pop at 50% of that range, you know you mapped your range correctly, because a lot of the time there is going to be resilience in price at equilibrium of that range. It's almost like I need like a thought candle. Okay, I got to think about this for a second. Okay, now I understand we need more liquidity. Boom. But yeah, if there's no imbalance in discount, it is not a Mando model. This is why Fibonacci is, I don't care what anybody says. If there's no imbalance in discount of the range, your 62 to 79% retracement is not going to do shit. You are going to lose. If you trade Fibonacci without understanding imbalances in price, you are going to lose. I will go to war with anybody on this. There's so many examples of this happening every single day, and here's just another one. There's no imbalance in discount of the range. Price slices through our golden pocket like nothing. If there's no imbalance in price, there's nothing that's going to catch it. We can't just, take percentages and hope they're going to be, offering us anything. Now that's